Welcome back, it's Jason Walter here, and here's your latest housing market update. In today's video, I'm going to give you an update from Realtor.com. They actually just reported today at the time of this video, which is the 23rd of June, an update regarding home prices and housing inventory. And I'll give you guys a hint. Housing inventory, according to Realtor.com, is now far higher right now compared to 1 year ago. So with that said, let's go ahead and dive right into the video. And of course, please hit the like button. I greatly appreciate that. That helps support my YouTube channel. And I hope you guys appreciate these frequent housing market updates and my transparency regarding those as well. So here's the report from Realtor.com. Again, posted on the 23rd of June. And this is for the week ending June 18th of this year. And it says here, another influx of newly listed houses for sale. In other words, we're seeing more new listings hit the market. So that, combined with fewer home sales, helped push up the number of houses for sale up 21% compared to 1 year ago. However, despite this improvement in housing supply, again, a gain of 21% compared to a year ago, home price growth continued at double-digit pace. However, though, it did not accelerate. In fact, the median listing price is holding steady at a 16.9% annual gain, and this is holding steady for the third consecutive week. One thing I want to mention regarding this is that it's bad when we're talking about home price gains of 16.9% and we're celebrating the fact that they're not increasing for 3 consecutive weeks. It just goes to show how insane our housing market has been over the past couple of years. So they go on to say the following in this report here, though. It says it's not just homeowners grappling with high home prices, rents are also soaring to new highs. So here's a report from Realtor.com. I'll briefly touch on this because I want to jump back into giving you guys an update regarding home prices and housing inventory. But this is a rental report for May that was just published a couple of days ago at the time of this video here. And it says the median rent in the top 50 metros that they track reached $1,849 per month. And that's a 15.5% increase at the same time last year. And this is also a new rent record for the 15th month in a row. In other words, average rents across the United States have reached an all-time record high for 15 months in a row. But check this out because this is pretty insane. So May's median rent constitutes a 15.5% increase over May 2021. However, though, a 23.2% increase compared to May 2020, and also a 26.6% increase over May 2019. So in other words, over the past 3 years, rents on average have increased 26.6%. So obviously these numbers here are jaw-dropping, but this does mark a slowdown though, and they went on to say the following here. May 2022 was the slowest annual growth rate for rents since September 2021, and the annual growth rate of rents has slowed each month this year, after peaking at 17.3% in January. So rents increased by 17.3% in January, but every single month this year, rents have been decelerating. In any case, going back to this original report from Realtor, it says these high rental prices is one of the reasons why home buying still remains very attractive to many people. It says here, home buyers today using a fixed rate mortgage can be assured that the majority of their monthly housing costs will remain fixed going forward. However, it says this, and even those taking an adjustable rate mortgage are likely to be guaranteed a fixed rate for the first 5 to 7 years. But my question is, what happens after 5 to 7 years? So in my personal opinion, it's much more risky to get an adjustable rate mortgage because in 5 to 7 years, we don't know what home prices are going to be like, right? What if you buy a house today and you're going to be underwater in 5 to 7 years? For those who are banking on refinancing in order to get a fixed rate mortgage, those people are going to be in very big trouble because they're not going to be able to refi because they have no equity in their houses. And in the meantime, their housing payment is going to increase greatly because after this teaser period of 5 to 7 to 10 years, where you have a fixed rate mortgage and then it becomes adjustable, your mortgage rate becomes adjustable and therefore your housing payment adjusts to current mortgage rates. So in my personal opinion, an adjustable rate mortgage is very risky, and I would much more rather for people use a 30-year fix or a 15-year fix in order to buy houses right now. For people that rent, you have to worry basically every year before your lease is up whether or not your landlord's going to be increasing your rent. However, though, when you have a mortgage of 30 years or 15 years and it's fixed, then your principal and interest payments remain fixed during that period of time. And you don't have to worry about your housing payment increasing greatly unless you live in a state where property taxes increase greatly year to year. In California, for example, we have a cap on our property taxes. So they can't go up greatly each year. However, though, compared to other states like Texas, for example, their property taxes can go up greatly year to year. So in other words, there's pros and cons of buying. It just depends on your circumstances and where you want to live. So let's go back to this report here. It says the median listing price again grew 16.9% from 1 year ago, and the typical asking price of a house for sale was higher than 1 year ago by double digits for a 27th week. However, though, this week's growth rate was not an acceleration from the previous week. In fact, the rate of home price growth has held steady at 16.9% for 3 consecutive weeks. So obviously, it's a positive sign that we're not seeing this giant increase every single week of home price growth, but the growth rate now at 16.9% is still above historical norms. And they state the following here: as the number of houses for sale increases and costs of financing at higher mortgage rates rises, we expect home price growth to slow. It's interesting to see that they expect home price growth to slow if these trends continue. However, though, according to Redfin, they are reporting that potentially home prices could decrease in 2023 if we continue to see mortgage rates of 6% and for housing supply to continue increasing. Meanwhile, new listings, which is a measure of houses being listed for sale each week, rose 6% from 1 year ago. And they have now seen more houses come up for sale, in other words, more new listings, this year compared to last year in 11 out of the last 12 weeks. Meanwhile, active inventory, which is the total number of houses for sale, rose 21% from a year ago. So inventory was roughly even with last year's levels at the beginning of May. This is pretty crazy, so check this out. So here's active listings. So for the week ending June 4th, we're actually up 13%. But for the beginning of May, which is basically a month and a half ago, this number was 0. So the number of active listings at the beginning of May of this year compared to the beginning of May of 2021 was basically flat. But a lot has changed since the beginning of May of this year. So for this week, up 13%, and then the following week, up 17%. And this week up 21%. So basically over the course of the last month and a half, the beginning of May until now, we went from 0% to a 21% gain in active listings. But according to Realtor.com, we're still about 50% below the supply levels compared to the beginning of this pandemic. So in other words, a lot of home buyers have more options right now, which is obviously a step in the right direction, but we obviously need more housing supply. Meanwhile, on average, houses are still selling very quickly, and homes spent 4 days less on the market now compared to last year. And it says here, of course, more homes for sale will eventually bring more balance to this housing market. And speaking of that, check this out. This is on Uncle Fred's website, and this is according to the National Association of Realtors. I just made a separate video regarding this a couple of days ago. So the month supply right now in the US is at 2.6 months. So we've basically been moving in the right direction. Ever since February of this year, the month supply has been increasing. So basically went from 1.7 months in February 2022 to now 2.6 months. In my personal opinion, we need this figure to be about 4 months of housing supply in order to really cool off this housing market greatly. So going back to this report here, median list price, again, holding steady at 16.9% for 3 consecutive weeks here. And new listings, look at this, year to date, we're basically flat. For this week ending June 4th, up 2%. Then they increased that to 3% and now are at 3%. And now for the week ending June 18th, 2022, we're up 6% from 1 year ago. Okay, to summarize today's video, for the week ending June 18th of this year, the median listing price is up 16.9%, but that has been flat over the past 3 weeks. New listings are up 6% compared to just 3 weeks ago, or just 2 weeks ago, we were up 2%. And active listings, which is another word for housing supply, we're actually up 21% compared to 0% at the beginning of May of this year. Also, houses still selling very quickly, 4 days faster compared to 1 year ago. So comment below with your biggest takeaways from today's video. Also, if you got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.